All right, guys, back to work tonight. Pretty good day. Another great day comes to an end. It took us a little bit longer than we wanted to today, but finally got that beautiful reversal on the S&P and Nasdaq. Hope you guys made some money on that here today. But it's back to work tonight, right? Wednesday evening. We got a pretty big Thursday coming tomorrow. We get a debt ceiling vote tonight. We get a brand new month of June starting tomorrow. We get a ton of news on the schedule for tomorrow. And I'll tell you, there are a lot of really great trades we're tracking for Thursday. As always, I'm going to cover all my favorite trades in the video here tonight, that we get a game plan to make some money tomorrow. Before we jump in and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, do me a favor. Will you hit that like button? Give me a shout out. Give me a holler in the comment section below. Always appreciate you guys tuning in and supporting the YouTube channel. But enough of the intro. Thursday is right around the corner. And I'll tell you, we've got quite a bit to look forward to. What might be one of the best days of the week tomorrow in our trade room. But I'll tell you, lots of ranges right now, right? Range on the S&P, range on the crude oil, no range on the Nasdaq. But I'll tell you, across all three of these markets here right now, lots of bear traps. Bear traps are certainly one of my favorite trades for tomorrow. I'm going to talk about why I say that and kind of how to capitalize on some bear traps. We'll talk about bear traps. We'll talk about breakout patterns, reversals here tonight. Lots of great trades on the long side and the short side setting up here for tomorrow. Before we jump into each chart, though, and talk about my favorite trades for tomorrow, let's all get on the same page here, shall we? Tomorrow's going to be a pretty busy day. And of course, Thursday, first of the month of June. Remember, anytime we transition into a brand new month, we do expect there to be an uptick in volatility. So probably going to be a little more volatility the rest of the week. There are really four things that are on my mind as we go into tomorrow. First of all, is that debt ceiling vote. We're supposed to have it coming out about 7 p.m. Eastern time tonight. We continue to listen in for new updates out of the debt ceiling debate on Capitol Hill. We know they're trying to kind of rush this thing through the Senate later on this week. So that is a very big kind of wild card or variable or known unknown we're watching here for tomorrow. That's one of the first things on our radar for tomorrow. Next thing, ADP employment number at 8:15 Eastern time. That definitely has potential to shake the markets up. The big news tomorrow, arguably, that we know about is the ISM manufacturing index at 10 o'clock Eastern time. We oftentimes, those ISM numbers, anytime you see ISM manufacturing, ISM services next week, those are some of my favorite market catalysts. Be aware of that tomorrow. And if you're an oil trader like we are, the weekly inventory report, remember the oil report is usually on Wednesday, but because Monday was a holiday, it gets kicked back into Thursday. So those are kind of the four things on my mind for tomorrow, right? Tonight, of course, is that debt bill, that debt ceiling, whatever you want to call it, the vote tonight on the House. Will there be any holdouts? Will there be any shenanigans? We'll be watching that tonight closely. And then, of course, ADP tomorrow, 8:15, ISM manufacturing, my target tomorrow, my focus, 10 o'clock Eastern time, and of course the petroleum status report at 11 o'clock Eastern time. So keep those on your radar for tomorrow, and you better come back tomorrow night, because tomorrow night we'll talk about getting ready for what is arguably the biggest news of the week, and according to the Fed, probably the biggest news of the month is an employment number coming on Friday morning. We'll talk about that tomorrow night, obviously, though. Let's get through tomorrow. Let's find the best money-making trades for tomorrow here. Now, I'm going to cover all my favorite trades across all three of these markets. If you like making money, I would definitely make sure you watch all the way to the end of the video here tonight, because every trade I talk about can be applied to your favorite market. So don't just click off after your favorite chart is gone. I will give you a reason to stick around all the way to the end. I'll wrap it all together. Now, jumping into the charts here this evening, these are all tick charts, guys. Don't forget, you can find all the time frames in the upper left-hand corner. And of course, this is the 21 EMA. If you're watching the first time right now, I have the 21 EMA on all of these charts. What's the most important factor on the Emini S&P right now? We'll go S&P, Nasdaq. We'll wrap tonight here on the crude oil. video, why don't we take a look first of all at the 60-minute time frame. I like to use the 60-minute time frame to give me an overall directional bias. I find by filtering my trades in one direction, it makes it a whole lot easier to find the best trades each day right now. Now, you'll probably notice that on the 60-minute chart, a couple things kind of stand out. First of all, we're overall bullish, right? We're definitely kind of overall, the general direction here on the 60-minute chart is definitely overall bullish. Higher highs, higher lows. You'll also see too that every time we get these pumps up, we're getting these kind of sharp corrections and then back to retest, right? We talked about this last night. Strong run up. We ran into overhead resistance. It should come at no surprise that we see this relatively sharp correction right now. Look where we are though. We are literally sitting right on what would normally be seen as some pretty key support. So in this area here, you have to think the buyers have got that dip they would love to get to buy back up to retest these highs. But really, you've got to think right here, this is where the buyers and sellers are going to duke it out. This is where they're going to fight it out right now. If the buyers can grab control of this, they'll want to run this thing back up and take out these highs. Again, look what's happened a couple times ago, right? Strong run up, sharp correction, back to retest the high. If the sellers can hold this, you have to think they're going to try to what? Try to run this thing back down to those lows. I would give the buyers a little bit of the edge right now because of what we've seen over the last few weeks, the last few months. This is why I said in the introduction, bear traps. It seems like this is a great spot to trap in some bears, use their stops as fuel for a possible squeeze going back higher. Now that we have kind of the bigger picture understanding of the situation, now let's go back to the chart in front of us. This course is a tick chart. I like to use tick charts. They make everything easier. Support and resistance, entry patterns, everything's pretty much easier with a tick chart. Now, if we understand that we're sitting at some pretty significant support areas here, look what we have now. A bullish move up, right? Notice how the buyers jump off the moving average, right? Anytime we see buyers or sellers, anytime one side of the market jumps off the moving average, that gives them control of the short-term momentum. We basically pop up and we go into a trading range. Now, if you're a student of mine, or if you've taken any of my free trading classes over the years, you know that ranges act like magnets, and whenever we have a bullish move into a trading range, the goal ultimately is to find support levels underneath the range and buy off those support levels. Now, this would go right along with the overall idea we just talked about on the 60-minute chart, right? So that's one way I'm looking to trade this for tomorrow. The second way to do this, obviously, is to trade a breakout, right? Breakouts are a little bit more difficult because obviously we have to kind of break free of that trading range, but a bull breakout is also on my mind. Now, if you're following along so far, think about how difficult it is now to be a seller. All right. This is where I say, boy, it's difficult to find a good short trade right now. For example, if we go lower, does that look like a great place to get short? Of course not, right? You're at support, again, on the 60-minute, the range above you. So this is a great place for rookies to sell short so we can use their stops as fuel to run back up into that trading range, right? Now think about, too, what if we go higher here, right? If we go higher, does that look like a very good place to short up here? We're selling high. I like that, but not a real easy place to sell short because, again, bullish momentum into a trading range. All right, so it's not that easy to find a good short here right now. I will talk about how to short this thing in a moment, though. But let's talk about kind of one of my favorite trades here for tomorrow. Now, we talk a lot about these in the free trading course, right? So you guys are learning kind of this sequence here. One of my favorite ways to kind of buy the low of this move is just we saw it here today. I mentioned in the introduction, it took a bit longer than we wanted to today. We finally got that move lower. See the bears try once, the bears tried twice, and see how those stops, right? They act like fuel, right, to run back up like that. We talked about this pattern last night in the video, right? So if you were watching last night's video, again, it took a bit longer than we wanted it to. We finally got it, late morning, early afternoon. So So same thing, right? As we go lower, I'm hoping we get some more rookies that will come in. I'm hoping they will try a couple times to sell this thing short. Remember, when you're looking for a failure pattern, we call these failure patterns in our trade room. These are failure patterns in our free trading course, right? So as we go lower, let's try to trap in some of those bears, and then just go over here, right? Use their stops, right, as the catalyst to be a buyer, right? Think about where their stops are. Think about where their pain is. You know my logic of why I'd like to be a buyer there. Now all we need is a nice strong signal candle, right? And we can punch this thing running higher here. Now, one of my favorite trades after these failures is a bear trap, right? Is a bear trap. So if we do get that nice strong signal going higher, keep an eye out for a follow-up trade right underneath. These are called trap patterns, right? You guys are learning this in the free trading course as well, right? So it's a failure pattern, literally trapping the sellers underneath the moving average using stops as fuel. And then as we go higher, what I'll do is I'll go in, draw a trend line off the highs like this, right? Bring a channel down off that low, and I love to grab that first test with a bear trap or really any of the entry patterns that you guys are learning in the free trading course. Which reminds me, by the way, I know that most of you guys and gals have taken our free classes. You've learned all these entry tactics. I always love seeing those screenshots of your P&Ls every day, so keep them coming. But listen, if you're watching for the first time right now, if you haven't learned the failures, the traps, how do you stop this fuel, I'll put a link up here for you, upper right-hand corner, for our free trading course. Grab that link that popped up there. Take that free video series course, because I'll tell you, the strategy you'll learn in that short video series will teach you a simple trick to know where the best winning trades will be each day. And I'll teach you 4 of my favorite entry patterns to help you start making money on your own out there. If you're missing the best trades each day, if you're not getting consistent results out of your trading right now, the roadmap that you'll learn in that free video series will put you on the right track right away. It will. You'll love it. And let me know how you like it too. I'd love to get some feedback in my email box. Now, I've got the idea now of buying off the low, right? Okay, we mentioned earlier on the 60-minute, okay? This is kind of the battle area, right? So what if the bears take this and we keep going lower? It's possible. It's certainly possible, right? Who knows? Who knows, right? World's crazy out there right now. What happens? How do we sell it, right? How do we sell it? What do we need? What we need is proof. Right, we need to take out those lows, and we have to look over here. Right, what happened over here? Every time the bears tried to take it lower, right, they couldn't quite get the proof of that breakout. They have to take out that low. They have to hold the pullback. And what do we always say in our trade room? They have to what? They have to jump. Right? They have to give us that proof, that jump off the moving average. Remember, whenever we see one side of the market jump off the moving average, that gives them control. So as we go lower, if they can hold the pullback and again kind of jump off of that moving average, that gives us now what we call a 1, 2, 3 move. This is called a 1, 2, 3 breakout. You will hear a lot more about 1, 2, 3 moves in my trade room. Don't you worry. But if we can see them jump off that moving average, now what I can do is I can mark off that low. Okay, I can then go up, mark off the high. See how I draw that channel? You always want to, when a bear market begins to roll lower like this, just get in the habit of drawing trend lines off the lows. Okay, once you draw them off the lows, then pin them up around the highs. And what do we always say? Look left, find some prior swings, and find one of our entry patterns. It could be a bull trap off the high. It could be a buyer. It could be a pop up, buyers try off the moving average, a failure pattern, one of my favorites, right off the high there. But the key is, again, we have to have them hold that pullback, hold it, jump off moving average, get that momentum going lower, show us proof they're actually breaking through this area right here. Because again, we may take that low out, trap, and pop right back up, right, when sellers get stopped out, right? So that's again, that's a very big thing on our radar, on our radar right now. Also, too, keep in mind, too, if we were to pop down and begin to grind down, right? See that? Okay? We call these pop and grinds. Pop and grinds are really, really easy. again, remember, in a bear market, get in the habit of drawing trend lines off the lows, okay, then pin them up around the highs like this. And again, if we're seeing a convincing break right through that low, okay, we know the situation we're in right now. So we have the trap of the high, look for bull traps above the high of that channel, get buyer failures off the moving average, failures into pullback combination, right? We talk about the price action cycle, right, in our free trading course. All right. Now, one thing you want to kind of keep in mind is where will the market want to go next? We've got that level down at 41.46. Again, on the 60-minute chart, you can easily see that 41.46 right there. That'll be a big objective next up. And of course, that 41.14, right, going lower. All right, guys, that's the game plan now if we go lower here on the S&P. Now, what if we go higher? Right? What if we go higher here? Let's talk about going higher. Let's do that now on the NASDAQ, because the NASDAQ is pretty similar. Well, the one thing about oil. The one thing about the S&P right now is, like I mentioned earlier, if we go higher, this now is a range and a potential range breakout. So let's talk about this now over on the NASDAQ. Let's see what the NASDAQ's up to. The NASDAQ, of course, over in the NQ, 5,000 tick chart on the NQ right now. Let's go take a step back first here on the 60-minute, right? Because the 60-minute chart, you're going to see right away here, quite different than the S&P, right? The S&P was a bit mixed. You know, it's overall, this is very, very bullish. And of course, you can help AI, you can help, you can thank NVIDIA, right, for this run up. And so anyways, the most important thing right now is this is a very strong move. Anytime we see a strong move in one direction, what do we always talk about? We're waiting for a pullback and a retest, right? Anytime we see a strong move in one direction, we expect a pullback and a retest, right? We expect a pullback to attract in more buyers. Buyers want to buy low. So you can see right now, this is a very convincing move. It makes perfect sense that the market would pull back a little bit because who wants to buy high way up here, right? So now we're looking for that pullback and a retest of that high. It's definitely, we definitely have, you can see it, we definitely have space to go lower, right? Measured pullback off that high, measured pullback off that high, bull channel off the highs there, bull channel right here. So we certainly do have space to go, right? We could keep going lower here, but I'll tell you though, this is, you're really trying to thread the needle right now on the NASDAQ, unless this thing completely rolls over, right? And really separates off the 21 moving average, that yellow line. Unless something dramatically happens here, this seems to be a great place to be a buyer right now on the NASDAQ. The tough part about this is that you'll notice, we go back to our main chart here, we're pretty bearish, right? We're pretty bearish here in the short term. It's been kind of winding its way lower here. So the game plan is pretty much the same thing going lower as we just talked about on the S&P, right? I would love to take out some of these lows, right? Trap in some of these bears and buy into their stops. If we take out those lows, if we hold that pullback and we jump off the moving average, really the next big objective is way down there, right on the 60-minute, that 14.058. But again, you know, show us you can do it, right? Show us you actually have proof, right? Show us you can hold that pullback and go, because so far they haven't done a pretty good job at doing it. So at this point, it's very difficult to want to sell right here, right? It's almost impossible to want to sell right there. If you sell right here in the NASDAQ right now, your risk is here and your reward is right there. That makes sense, right? Because, you know, in all reality, your stop needs to be above this high. Okay, yeah, this would have been a good place to sell, but you missed. But we're too late now, right? We're too late now, right? So at this point, very difficult, like the S&P, to find a good place to sell short. If they can hold it and keep going, okay, now we've got a chance for a 1, 2, 3 breakout going lower. I really like that bear trap though off of that low. All right, so keep an eye on that strategy we talked about on the S&P. Now, going higher here. If we go higher here now, what's the, well, first of all, if we go higher, now there becomes a rising support trend line here. Rising support trend lines they're not always a deal killer for sellers, right? But they sure as heck make their job more difficult, right? So if we end up going higher right away, that rising support trend line coming in here makes it very difficult now for sellers to have confidence with this, right? So still not going to be easy to be a short seller. I also think too, if we fail to retest that low right now, if we fail to retest that low and price begins to run higher, we may see a heck of a lot of FOMO, right? Remember, moves like this on the 60-minute chart, when they turn around, everybody wants in on it because they know where it's going. Look what happened last time, right? Look what happened last time we got the pullback on it. Once the thing turned, everybody said, just get me in. And so we have to imagine that if and when this thing turns here, right, it may just snap right back up to retest those highs. So my first thing is if we do end up going higher, be prepared for one very specific entry pattern, which is called a 2-try trap setup. That's kind of the first thing on my mind here, because if we end up snapping and ripping back higher, the most important thing will be finding traps to get in. There really are kind of 3 main scenarios going higher to be a buyer on this. Okay, one is this one right here. Okay, now we talked about something like this. We talked about trapping the bears in below and then grabbing that, right? We talked about that earlier on the S&P, didn't we? Right? Kind of that first test off the low of that channel. That's the same exact pattern, except it's right here. And the reason why you want a bear trap on that is because as we go higher, you got to think there could be some bears up here who are still trying to stubbornly short this thing back down again. So that's one way I'm looking to buy it, right? Another way would be, remember we talked about a moment ago called a 1, 2, 3 move? Okay, let's say we take out that high right now. Let's say we pull back to the moving average and we jump. Remember, show me some proof. We jump off that moving average. Now, again, I realize a lot of resistance up overhead, but again, think about that 60-minute time frame I just showed you. Okay, if I can get this jump off that moving average, okay, now what I can do is go out, draw a trend line. Remember, in a bull market, draw trend lines off the highs. In a bear market, draw trend lines off the lows, right? I know it seems backwards, but when you take that free trading course, you'll see a lot of examples of this, and you'll quickly see why this works so well. Okay, now, we draw the trend line off the highs like this. What I'll oftentimes do is pin it down at these big lows, okay? Whatever gives me the best chance to get underneath the prior swing, get underneath the 21 moving average, the swing levels are where traps live. The moving average, the 21 EMA, is where failure patterns live. Failures into pullback, combinations. Okay, now real quickly, and this will also apply to the S&P. Remember, this little kind of illustration I'm doing right now is very, very important because this is the same pattern we would trade going lower. Right? So 1, 2, 3, find that channel off the low. Okay, so you can flip this pattern, right, going lower if you want to as well. It works in both directions. One key thing about this is, again, we're not going to buy the first pullback. We're going to wait for it to give us proof, make sure we have that momentum now for the bulls. Then we look for the first test off the low of that channel. Okay, and again, it could be any of the entry patterns you guys are learning in our free trading course. I love traps. Those are my favorite, as you guys know already, right? Traps and failures into pullback combos. The last thing you want to keep in mind is the first leg is usually equal to the third leg. Okay, trends love to go in threes. And so if we jump up, pull back, and blast, that first leg, that will be kind of the measuring leg. And then once we know how deep that pullback is, we don't know how far the market will pull back in that situation. But once we know how deep that pullback is, and we go, okay, we know how big the first leg is, now put that at that low, right? Pin it at that low now, and that's going to give you now where that kind of objective is, we call it. All right. One of the easiest ways to make more money is not to trade more often, but get better at letting your trades run, right? Get better at squeezing as much out of your best trades as you can. I'm always telling my students, don't trade more, right? Get more out of the trades you actually take, right? And by knowing the objective first leg, third leg, that'll make your life a whole lot easier. All right, your broker won't like you very much, right? Because you'll be trading as much and paying so much in commissions. Last one would be the pop up and the grind, right? Remember that when we talked about earlier on the S&P, right? Okay, whenever you see it pop up, what will happen is it'll pop up. It won't pull, it won't pull back and jump. Okay, we call these 1, 2, 3 moves. Won't pull back and jump. It'll kind of pop up and begin to grind. Okay, when it grinds like this, the squeeze is on. Okay, when it grinds like this, squeeze, squeeze, squeeze. Remember, 60-minute chart, very strong run up, right? Unless this thing completely falls apart here tomorrow, who knows, right? All I can do is play the odds here right now. But if we do end up turning here, though, remember, now it's a bunch of FOMO. Right now, the bears are squeezed. The bulls are like, just get me the heck into this thing, and you oftentimes get stuff like this where it just snaps back to those highs here. So, like I said earlier, if it pops up and begins to grind, that's the squeeze. Okay, that grinding motion in the chart, those are the sellers getting out. Okay, those are not buyers buying up there. Okay, buyers don't buy high, they buy low, right? Those are sellers getting the heck out of the way. Once that happens now we can get a little more aggressive. Draw off that high, right? Pin down to those lows, look left, find prior swings, and as we always say, don't miss that first test. All right, I won't bore you again with all the entry pattern descriptions, right? But you want one of the entry patterns, right? Traps, failures, pullbacks, offload the channel. And again, remember, first leg, third leg, okay? Pretty easy. Once you kind of get the grip of that first leg and third leg, and again, you'll have, right, some levels up overhead here. We're watching for some bigger targets. If you got a runner for it, right, obviously leave that runner back to that big top up there because that's where the market wants to go. That's where it wants to go. Okay, last kind of topic here right now. How would I sell it? Right? If we go higher here, there could be a trend line coming across that high. What if we did this? What if we pop up? Remember, we are an overall kind of bearish move here on the Nasdaq right now. So what if we pop up? We're anticipating the buyers will hold this and go. We're anticipating the buyers may end up going through that high, shallow pullback, and giving us a 2-try trap, right? We're anticipating it may pop up and begin to grind going higher. Okay. What if we don't get any of those? Right? What if we pull back here right now and the buyers are trying? They're trying, right? They're struggling. Remember, if we start seeing those buyers struggle, this is an overall, remember, it's still pretty bearish here right now, right? So if we can take out some of these highs, okay, and the buyers begin to start struggling here, what you want to look for in these situations, because of that overall bullish bias right now, is that crown reversal, right? That crown reversal. There's two pieces to this type of short. One is, I guess 3 pieces. One, take out a major high. 2, buyers try twice. Remember, guys, buyers want to buy low. Right? Buyers want to buy low. So they try to buy it once, it goes lower. They buy twice, okay? And a bull trap, a trap above that high, that really is the safest way to short this. And I say that because, again, of that 60-minute chart, right? This is not an overall bear market. It's a short-term bear market, but it's overall bullish. And so we've got to be very careful getting too aggressive shorting this area up here because, again, there'll be a trend line coming in below. So you really got to have that. Again, we call this would be a 2-try failure, but you got to have that bull trap above it because that's the only safe way to do it because of that rising support trend line and because of the overall clear bullish bias here on the 60-minute. All right, guys. Boy, I love this game plan tonight on the Nasdaq and the S&P. What do you think about it? Let me know in the comment section. I would love to hear. Are you in agreement on this? Do you disagree? Am I crazy? Am my ideas here right now? I'd love to hear your feedback. I'm kind of your classic trader. I have no ego. Whatever the chart tells me, I will do. I'm always looking to learn new ideas and get different feedback, different trade ideas. So I'd love to hear from you down in the comment section below. How about some oil? Oil looks pretty bearish right now. Kind of looks like the S&P, doesn't it? What's happening right now in the 60-minute? So oil definitely is one of the more, let's say, challenging environments right now for a couple reasons. One, you'll notice in the 60-minute chart right now, we're definitely very bearish overall, right? We're definitely very bearish overall. It's a very strong move back to May 3rd, May 4th. Remember, anytime we see a strong move in one direction, what do we expect? A deep pullback. This happened a little bit deeper, and a retest of that low. So we already know where the bears are trying to go right now. There's no doubt about that. 63, 64 is where the bears are trying to get to. But that's the easy part. The hard part is this range above us. Remember, ranges act like magnets. And so what do we always talk about when it comes to a bullish move into a trading range? Yeah, find areas of support, right? And and buy going back up into that trading range. Now, I definitely feel like the bears have quite a bit of their hooks in this thing right now. We're seeing quite a bit of signs of a slowdown of the economy. We saw some relatively bad numbers, or I guess good numbers, I guess you would say, for inflation purposes, out of the EU. The Fed is talking about pausing after seeing the JOLTS report today. So it seems like commodities overall, right, the demand is slowing down. So we're leaning on the bear side right now. But at the same time, though, it should not surprise anybody if we end up retesting this low, and bouncing back up into that trading range. That should not surprise anybody, right? Anyone who knows how to read a chart. Now, let's dive into it a little bit closer here. We have a very strong run going lower, right? Very strong run going lower. They're probably going to want to retest that low. Now, in these situations, when we have a kind of a bearish market, but we're sitting on big time support, what I tend to think about doing is as we go lower, I look to basically buy the bounce, right? Buy the pullback, right? Buy the correction, and then look to sell the rip, right? Short the bounce, right? So I tend to look for trades in both directions in these types of scenarios. And I look at this scenario right now, and I think, okay, this could easily be a candidate for buying the bounce, right, with a bear trap, buying the bounce with a bear trap. And again, as we go lower, buying it up, shorten it back down, buying it up, shorten it back down, right? Basically trading that rotation as we go, as the sellers try to take out that low at 63, 64. All right. So that's what's on my mind right now on the 60-minute. Back to our main chart. Okay, here's that strong move down I mentioned a moment ago. Anytime we see a strong move, we expect a retest of that low, right? Okay, now remember, we are sitting at quite a bit of support down here. So what do you think is the best way for me to buy off the low? Remember, range above us. Act like magnets, okay? So don't be surprised if we do see a nice hard bounce. This is almost the same game plan as we had on the Emini, right? The only difference is the E-mini has a little bit more of a bullish tone to it, a little more of a bullish bias to it. So if we're not as bullish on the oil as we are on the S&P and the Nasdaq, this is where that crown reversal would really come in handy for a bear trap right here, right? So let them try once, let them try twice. Remember, guys, if momentum is very bearish, we can't just buy off support because we don't have momentum on our side. So because we don't have momentum, we need some other catalyst, right? We need something else to fuel the move going higher. And the fuel we need is a stop run, right? We need some sort of stop run to fuel this move. So I like the idea, and we talked about this pattern pretty much verbatim last night in the newsletter. I like the idea of a crown reversal pattern. Again, a little bit of a safer pattern, right? Coming off of that low. Not as aggressive as simply trapping those bears in once, bears twice, and simply buying into those stops. That would work too, right? A little more aggressive though. I would rather take out some of these lows, get the bears trying a couple times, and try to buy in as low as I can with that crown reversal going back up into that range. If we then end up running higher like that, then I can go out, start finding my channel off the high, right? Channel off the low, and start grabbing that trap off the low from there. This is very similar to the game plan we just talked about on the S&P earlier on in the video. All right, guys? So rather than simply trying to buy that low, I'll wait and let the sellers tell me when they're in, and then use their stops as fuel to fuel that reversal. right? That's the easiest way to make money, at least in my experience, in a bear market when you're sitting at a level of support. Now, like we mentioned on the S&P as well, if they take out this low, if we hold that pullback and we jump off that moving average, okay, remember it's a bear market, right? This would make sense. I can't sell that first pullback though. Right? I can't sell that one because we're right into that low. I can't do it there. But if I can get that 1, 2, 3 going lower, okay, now I can mark off that low. I can mark off that high. And again, I won't bore you guys with this, right? But any of the entry patterns, right, we talk about in the free trading course, right? Traps, failures, pullback combos. And remember that first leg, third leg, right? That becomes your objective. That could also be that pop and grind, right? Pop and grind going lower. Mark that low, mark that high, find those swings, and don't miss that first test right off the high there as well. All right, guys. So that's kind of what's on my mind there as we go lower. If we were to roll and run higher, really remember we're still kind of an overall bear market. So as we go higher here, a lot of momentum coming off of the low. This is exactly where those two try failures can be used, sell off the high. And remember, we're not buying up here, not yet at least, but we have to wait for the buyers to what? To hold that pullback, jump off the moving average. Once we see buyers, look over here, right? We oftentimes see these things pop up, they pull back, but they can't go, right? So as soon as we see this thing roll off this low, pull back to that moving average and jump off that moving average, now we know it's reversal, and now we can go out and find those channels off the high, right? Mark off that low, and we can go looking for the entries off the low of that channel. All right, guys? So a lot of overlap there tonight on the crude oil, along with the S&P and the Nasdaq here. Hopefully that all makes sense. What do you think, by the way? I would love to know your feedback down in the comments section here below. Oil is definitely the tough one. We get some big news tomorrow at 11 o'clock Eastern time, so I like that bear trap off the low. We'll see what we get. Now, don't forget, guys, the game plan is ready tonight. Tomorrow, though, we're going to come out and we'll trade this stuff together tomorrow morning in our trade room. We get together every morning at 8 o'clock Eastern time with all of our students, and we trade this stuff together. I would love to have you there with me. If you're looking for a great place to come out and learn and trade along, I'll put all the membership links to our trade room. I'll put the free class links all linked up in the description down below. Don't be afraid to call the office if you have any trouble getting into the free classes, or if you have questions I didn't answer in the video tonight. And we always have live chat down there too for you in case you want some help with anything along the way too. All right, guys, hope you learned a bunch here tonight. Thank you so much for watching all the way to the end. Have a great rest of your evening. I will hopefully see you tomorrow morning in the trade room alongside hundreds of other members here at School of Trade. If not, we're going to come back tomorrow night. We'll do it again tomorrow night. Get ready for a big non-farm Friday to finish up this holiday shortened week. All right, guys, I'm out of here for now. Be well, be nice to each other, and I better see you next time. Adios, amigos. Bye-bye for now.